There was no public comment called in for either meeting last time.
Okay. Sounds good. I think we've got everybody. I'm going to go ahead and call to order the Retirement System Board of Trustees meeting for Friday, October 16th, 2020. Called to order at 8:02 a.m. First, we're going to begin with roll call. Myself, Lee Colick, chairperson. Present, Brett Nelson, vice chair. You're muted, Brett.
Yep, here we go. I'm here.
Thank you. Kyle DeBuck is a trustee.
Here.
Kyle?
Here. Can you hear me?
Yep, got you that time. Thank you. Paul Brake is a trustee.
Present.
Thank you. Julie Rudd.
Present.
Thank you. Lisa Genord.
Present.
Thank you. Tom Michaud.
Present.
Thank you. And Terry Gerlich.
Present.
Okay, thank you. Public comment? There was none. Brings us to request that the board approve the agenda for October 16th, 2020. I'm going to go ahead and make that motion. Is there support? Support by Paul. All in favor? Myself? Aye. Brett?
Aye.
Paul? Kyle?
Aye.
Any opposed? Motion carries. Request that the board consider for approval the adjustments, applications, and benefits as follows. Adjustments, we have Michael Clement, former officer with the police department, requests withdrawal of employee non-vested contributions and interest from the plan amounting to $17,917.15. Separation from service was effective September 16th, 2020. Applications, we have an amendment to the agenda. We did have James P. Cook of the fire department for retirement date of October 27th, 2020, and David R. Cummins, also of the fire department, retirement date of October 27th, 2020. Under benefits, we have Andrew R. Blevins of the fire department, fire bargaining unit, 29 years of service credit, retirement date of June 30th, 2020. Selected option D, 75% to surviving spouse, 7842.71 gross monthly benefit with withdrawal of contributions and interest of 113,285.31. I'm going to go ahead and make a motion to approve the adjustments, applications, and benefits as listed. Is there support? I have support by Paul. All in favor? I'm a yes. Brett?
Yes.
Paul?
Yes.
Kyle?
Yes.
The motion carries. Brings us to investments. I'm going to turn it over to Terry.
Hey, good morning, everybody. Thank you. Let me try sharing the screen here. And here we go. Can everybody see that? Market performance overview. Awesome. Okay. Well, September was fairly quiet. The markets did retreat a little bit after rallying so strongly over the previous several months. As you can see, equities were down about 3.5%. And fixed income was relatively flat. I can tell you already in October, it's just the reverse of that. Equities are up about 3.5%. So it's really just kind of been a round trip over the last 6 or 7 weeks. But certainly for the month was down a little bit, but it still resulted in a strong third quarter. You can see the rebound there in the orange bars, with equities up, at least U.S. equities up almost 10% in terms of large cap. Non-U.S. equities lagging a little bit, but still up fairly strongly. We've repaired a lot of the damage that we saw from earlier in the year, and now are back in the positive column. So good for the health of the portfolio. There really has been just continued support monetarily by the Fed. And they've been very dovish, saying, essentially signaling they're not going to raise interest rates for a long time. They'd like to see inflation move higher, even though there's no signs of that. And right now, in fact, this morning, again, I think mortgage rates hit an all-time low again. So the environment really hasn't changed, except for, we're starting to see the effects of the rolling off of the fiscal support, the unemployment support, and other programs that were helping people throughout the country. I know we noted in an earlier meeting how personal income actually rose in the second quarter as a result of all the stimulus, such as the CARES Act and other programs. All that's now starting to taper off. We're starting to see slower consumer spending as a result. Not surprising. We just I think right now the stocks we're moving sideways here. It all comes down to the market really looking into next year, as we've discussed, and that the market's looking past the near-term impacts of COVID, figuring that there will be a vaccine or better treatments as we go into next year. And so for now, it's really been a holding pattern. There's not a whole lot new to report since over the last month. Obviously, we're closer to the election than we were last month, and I think the market's already discounting what it thinks is going to happen. And generally, our view has been that, as we talked about again previously, is that elections don't have any particular long-term impact in terms of direction of the markets. They can have some short-term volatility, but I think a lot of investors are already placing their bets on their expectations for the outcome. So without belaboring that further, as I said, there's really not a whole lot new in the last month. The important thing is it was a good quarter, really focusing on those orange bars. And if I can get this there we go. So as you can see, for the month, as I say, it was a little bit of a loss, just under $3 million, but that's really reversed now. For the quarter, you can see the healthy rebound that we had experienced. So we started the year, important to point out here, started the year at about $159 million. We've been over, there's about $6.2 million in net cash flows out, pay benefits. But there's been a gain of $5.3 million, leaving us at about $158 million, and we're tracking pretty close to that as we sit here today. So certainly a very different picture than we saw back in April when the COVID crisis first hit. So healthy recovery. In terms of returns, again, remember you have 10 different investment strategies. We've got over 40 managers in a multi-manager implementation across most strategies here. That diversification has helped here in the midst of this volatility, and we expect that to continue to be important going forward. You see the month was a little weak on an absolute basis, down about 1.8%, but ahead of the benchmark, which was down a little over 2%. For the quarter, importantly, as you can see, up about 6.1%, comfortably ahead of the benchmark, which was up 5.5%. Excuse me, as you can see, really in the green bars, equities led the way in the quarter, despite a little bit of weakness in September. And of course, we're indexed and passively invested for the for large cap and small cap. Excuse me, I apologize. I was getting over pneumonia. But you can see it's really strength across the various equity implementations. The non-U.S. equity portfolio of about 7.8% for the quarter, a little ahead of its benchmark. Emerging market equities up, rebounding nicely, up 8.9%. So remember, emerging market equities have been hurt more earlier in the year, but came back pretty strongly here more recently. Fixed income still producing positive returns overall. Core fixed income, your investment grade bond portfolio, 5 managers there. You can see up 1.2% for the quarter, comfortably ahead of their benchmark. Emerging market debt up 1.8, almost 1.9% ahead of its benchmark, and then high yield bonds up 5.9 versus 4.7. Emerging market debt and high yield bonds have both been hit hard earlier in the year. Again, they tend to track more like equities than a conservative bond portfolio. They tend to have more risk and more volatility in them, but coming back nicely. So we're pleased to see that. We're pleased to see what the managers are doing there. Core property, we don't have a quarter's number yet, so it's a little bit of a stale number. It's really still a second quarter number. And then when it was down 1.49%, that number really hasn't changed. It's going to be somewhat flattish, we think, here as we get final returns in. And we'll have more on that in the next month. When we get returns from the various underlying real estate managers, but relatively flat on a year-to-date basis, which again, given the volatility, we'll take. And then finally, our other alternative investment asset classes. Structured credit continues to rebound nicely after getting hit hard earlier in the year, posted 9.8% return. So that's nice to see that coming back strongly. And remember, we're starting our investment in private equity. And we've made a commitment. We'll take several years to actually fund that and draw that money down and invest. It's a long process, but as you can see, the process has begun. There's about $83,000 invested so far. So not a lot to report there in terms of performance, but just getting started, and that'll continue to grow over time. So bottom line, it was a great quarter. Been a little bit sideways since September going into October. And we're not surprised to see more volatility over the next few months. And it can go both ways. Any good COVID news is obviously going to be very, very constructive. Any further fiscal stimulus will probably be well received by the market as well. So that's the report. I'm happy to answer any questions.
Does anyone have any questions for Terry? All right, well, I think we're good. Thank you. I appreciate it, Terry.
Okay, thank you.
I'm going to go ahead and make a motion to receive and file as provided. Is there a second?
Brett.
Got a second by Brett. I'm a yes. Brett?
Yes.
Paul?
Yes.
Kyle?
Yes.
Okay. The motion carries. That brings us to legal.
Thank you. I'd like to request that you adopt the 4 reports as reflected on the agenda, please.
I'll go ahead and make that motion then to accept them. Is there a second? Brett seconds. I'm a yes. Brett?
Yes.
Paul? Paul was a yes. Kyle?
Yes.
Kyle is a yes. Thank you.
All right. And then just a brief couple minutes on the Open Meetings Act. As you understand, for the last couple meetings, we've been virtually gathering. The Open Meetings Act, because you're a public body, applies. There have been some recent developments in that the Open Meetings Act, in my view, you previously were able to remotely participate. The governor came out with some orders over the last 6 months. About 10 days or so ago, those orders were overturned. So that threw in some some questions about the Open Meetings Act. Those questions have kind of taken on at least a different flavor as well, is that there's been legislation that was introduced and pass through the House and the Senate very rapidly this week. I anticipate if it's not already signed, it will be signed by the governor in short order here. And it's going to put different restrictions on your ability as a pension board to conduct meetings. Right now, based on the last version of the bill, it would give you the ability without reason to have virtual meetings through the end of this year. But come January 1 of 2021, you'd have to have, there's three exceptions or three reasons where you could virtually participate. One would be if you're in the military. Second one would be is if you had a medical condition which precluded you from attending the meeting. And the third would be an emergency, a state of emergency. So in those instances, the board members could participate virtually. Otherwise, you'd have to be in person, present at a location in order for it to constitute a meeting. So we don't have the official final version, but that's where it stands right now. Come 2020, so that would be 2021. Come 2022, the bill / potential law would say you could only meet virtually if you're in the military. So you can see where there's going to be a little bit more discussion and it'll need to take place, not necessarily today, but I wanted to kind of let you know where it currently stands. So for the next, meeting or two, you're good virtually. Hopefully the emergency conditions will be lifted. If they're not, then you can continue under that exception to have meetings in 2021. But at some point, you're going to want to have these discussions about how you're going to conduct these meetings. The other thought too is that, there are many companies that are not allowing their employees to travel. So whether it's restricting someone from getting on a plane, train, or automobile or a hotel, you may need to continue to have some virtual option so that outside service providers or members of the public who otherwise wanted to attend but have concerns about health and otherwise, that they can actually participate in in these discussions in the meeting. So that's where it stands right now. I should have a more definitive update shortly. And when I do, I'll be sure to send you a memo to that effect. But I just wanted to make sure, I know there's been a lot of coverage, there's been a lot of discussion, and I wanted to make sure we talked about it today so that you had the latest update at your disposal here. So open it up to any questions. If not, then that concludes my legal report. Thank you.
Okay, thank you, Tom. Is it your understanding then that would only be for the chair, the vice, and the trustees would be the requirement for the in-person, and that we could have the administrative staff, attorneys and advisors could still be remote?
That is correct. You would technically need 3 people because you're a 5-member board. You would need 3 people to be gathered together in person in order for it to be an official meeting.
Okay.
Unless, like I said, unless one of those 3 exceptions, exists, then you're going to actually need 3 people for a quorum.
Sounds good. Thank you. Does anyone else have any questions for Tom? I'm going to go ahead and make that motion to receive and file the information provided. Is there support?
Brett?
Brett supports. I'm a yes. Brett?
Yes.
Paul?
Yes.
Kyle?
Yes.
Okay, the motion carries. Thank you. That brings us to other. Julie, can I turn it over to you?
Good morning. Yeah, on the disclosure forms, if you could receive and sign them unless any questions.
Sounds good. Does anyone have any questions about the disclosure forms that are provided and attached? All right, I'm going to go ahead and make the motion to receive and file. Is there support?
Brett?
Thank you, Brett. I am a yes. Brett?
Yes.
Paul? Paul is a yes. Kyle?
Yes.
Kyle is a yes. Motion carries. Thank you. Let's go ahead and try to set that date for the next meeting then. Tentatively looking at the third Friday of each month, which would bring us to Friday, November 20th. Does it not work for anyone? Kyle? Good. Brett?
Good.
Okay. Julie?
It's good for me.
Perfect. Boy, that was easy. I like that. So the date of the next meeting is set for 8 a.m. Friday, November 20th, 2020. I am going to make a motion to adjourn. Is there support?
Brett?
Thank you, Brett. I'm a yes. Brett?
Yes.
Paul? Paul's a yes. Kyle?
Yes.
Kyle's a yes. Meeting is adjourned at 8:23 a.m. Thank you, everyone.
Thank you. Take care, everybody.
All right, you as well, Terry. Does anyone need a break before we jump into the next one? All right, I'm going to call to order the Retiree Healthcare Investment Board meeting for Friday, October 16th, 2020. Call to order at 8:24 a.m. Let's begin with a roll call. Myself, Lee Collick, chairperson, is present. Brett Nelson,
Present.
Kyle DeBuck,
Here.
Paul Brake,
Present.
Julie Rudd,
Present.
Lisa Janor,
Present.
Tom Michaud,
Here.
and Brian Green.
Present.
Thank you. Public comment, there is none. Next is request that the board approve the agenda for October 16th, 2020. I'm going to go ahead and make that motion to approve the agenda. Is there support?
Brett?
Support by Brett. Thank you. I am a yes. Brett?
Yes.
Paul?
Yes.
Kyle?
Yes.
I'm going to make a motion that the board approve the minutes for September 10th, 2020. Is there support?
Brett?
Support by Brett. Thank you. I'm a yes. Brett?
Yes.
Paul?
Yes.
Kyle?
Yes.
All right. Thank you. Brings us to investments. I'm going to turn it over to Brian.
All right. Let me bring up a report here. So I know Terry covered a bit from a market commentary standpoint, so I won't do a full rehash of everything. But you know, as a reminder, September was a bit of a reversal from the trend that we've seen for the past couple months. It's, I think, a reminder to investors that from an equity market standpoint, at least, it's not necessarily all as well. You know, we can, in fact, see negative returns, particularly in the later part of the month. You know, interestingly enough, everything that happened in September has been completely reversed here in October. So as if the month of September hasn't happened. You know, on a year-to-date basis, it's really a story of the haves and the have-nots. If you were a $1 trillion plus stock, you're just fine. If you're anything south of that, you are flat to negative. So on a year-to-date basis, for example, the S&P is up about 5.6%, but every other part of the markets, mid-cap stocks still in negative territory, small-cap stocks still in negative territory, and international markets are still in negative territory. It's an interesting piece. If you take out the top three names, if you take out Apple, Microsoft, and Amazon from the S&P 500, you go from being up 5.6% to being flat for the year. So it's been amazing the impact that those three names have had on the equity markets, particularly the S&P 500. The other interesting thing is, and we've touched on this before, I always find kind of digging into things from a sector standpoint to be really interesting. In the bottom left-hand corner here, we break out the individual sectors for the S&P 500. So the lightly shaded green bar here is the aggregate of all 500 stocks, right, up 5.6%, but there's a number of different sectors. And here we see information technology up 28.6% for the year, and the worst performing sector, energy stocks, down 48%. That's a 76% spread between the best performing sector and the worst performing sector. It's pretty amazing. I don't know that I've ever seen it at that wide of a margin. If you go back and look on a comparative basis, 2019, you know, the S&P's up 31.5%. Does everybody remember 2019 when everything was fine and we could go anywhere and do anything? There was a 38% difference between the best performing sector and the worst performing sector last year. And that was information technology up a little over 50% for the year, and energy stocks only up 11.8. So it's interesting to see last year and this year, last place and first place to be the exact same sectors, but even wilder to see the difference between those two, the first place and last place, to be 2x what we saw for a difference in return last year. So from a performance standpoint, before I shift there, I'll show you one thing. So one thing we're watching here pretty closely, right? So we've seen this fabulous recovery in things from a capital markets, fabulous recovery in valuations, particularly to the S&P 500. So one of the things that we watch closely, and we've brought this chart out a few times in the past. So this is the price to earnings ratio for the S&P 500 from 1948 to present. So every one of these little observations represents the measure of the PE on the S&P as of the end of a quarter in a given calendar year. So remember, price to earnings, simply put, is the price of the stock divided by earnings per share. So if a stock's trading at $30 and it makes $2 per share in earnings, that would have a PE of 15. You might hear it referred to as, oh, that stock trades at 15 times. So that the mean, the average over the last 72 years is 15.77. And then what we do is we break this out in a couple different ways. So we break it out by decile, so in 10% increments from a ranking standpoint. And then we also, if you think about going back to statistics and the traditional bell curve, is we look at things in terms of not only where is it versus average, but also how far away from that average is it. So we closed the quarter with a PE of 28.62. That's the black shaded you see in the far right-hand corner. The average, the long-term average, is 15.7. That's in the top decile. So it's actually the 94th percentile. So 94% of observations in terms of valuations on the market have been lower than this. And it's 2.5 standard deviations above the norm. So it's a pretty extreme valuation. Now, this would be something in what I would think of as a normal market that would give me a bit of pause, right? So wait, you're telling me, not only are we in the, top 95% of valuations, but we're also 2.5 standard deviations, right? This is kind of that black swan event. This is the thing that's not supposed to happen statistically. It's supposed to happen like once every 100 to 200 years. If you back out Apple, Microsoft, Amazon, Google, these valuations become much more normalized. So you've got a couple of stocks that are really driving extreme valuations. So if you hear mention of this, of, the market's at extreme valuations, we haven't been at this level since 1999 or 2000. I give you this just to give you a little bit of pause and a little bit of context around, valuations aren't nearly as extreme as they may appear because of the concentration you're seeing in 5 or 6 names really driving performance for the S&P 500. So let's talk about the overall retiree healthcare portfolio. As you look on an aggregate basis, this is the chart we added about a year ago. I always find this one really powerful. So total gains over the life of the trust of about $21.7 million, about a 5.2 or 5.3% return. So when you compare that back to the cost of the bonding, it still is in the green, still profitable. It's still been something that's been fortuitous from an investment standpoint. So where do we sit from an overall valuation? So we closed the quarter, and this number is probably going to come in a little higher because the only piece that hasn't valued yet is the real estate portion. Probably going to see estimates Monday or Tuesday and actual valuations late next week. So we closed the quarter at $131.7 million. We did give a little bit back for the month, down about 1.6%, but ahead of the policy index that was down 2.2. And for the quarter, about a 5.7, almost 5.8% return, right in line with the policy index. We did see a nice turn in performance out of a couple of managers on the domestic equity side, notably the AQR defensive portfolio. So that's one that's positioned with a little bit less technology, right? It's something that should do well in rockier markets. So that held in. You see slight outperformance for the month, about a little over a percent ahead of the benchmark. Sizer, we saw a nice recovery, still slight lag for the month, but we are starting to see some signs of life in that portfolio. And Cora, which has been struggling this year, had a nice month, down about 1.3, about half their benchmark from a performance standpoint, down 2.6. International portfolio continues to be a bright spot from a relative performance standpoint. All three managers outperformed for the month, be it First Eagle being their more conservative positioning and the Vontable portfolio being more growth focused. Those stocks have continued to do well. And then emerging markets have actually are now second place from a performance standpoint behind the S&P 500, are now almost in positive territory for the year. And then finally, from a fixed income standpoint, really no news out of fixed income, traditional high quality fixed income for the month, but it's been a great position for the quarter and for the year, up about 6.5%. And then that new addition that we made from an opportunistic standpoint late in the second quarter was adding some exposure to high yield. That was up a little over 6% for the quarter. And since that was added to the portfolio back in late May, early June, it's up about 7.5%, almost 2% ahead of its benchmark. So all in all, while we gave back a little bit in the month of September, all of that's been made back and more here in October, and things continue to do well. Now, I would expect continued volatility for the next, I think, they said about 18 days. To be honest, I've lost count. I just know there's an election coming soon. It just honestly can't come soon enough. I miss regular TV ads. I would expect some continued volatility around news around things from an election standpoint. Stimulus package, are we going to have it? Are we not going to have it? What's it going to look like? As well as anything COVID related. As Terry had mentioned earlier, these are kind of three main headline items that are going to continue to drive performance and drive the markets. So with that, that's the extent of the prepared comments that I had, but I'm happy to answer any questions that you might have.
All right, thank you, Brian. Did anyone have any questions for Brian? All right, I'm going to go ahead and make a motion to receive and file. Do I have
Support.
Support by Brett, thank you. I'm a yes. Brett?
Yes.
Paul?
Yes.
Kyle?
Yes.
Thank you. That brings us to legal. Anything additional after the agenda or no?
All my Open Meetings Act comments applicable here as well. Thank you.
Sounds good, thank you. Other? Julie, anything to add or just a motion to receive and file the disclosures?
And nothing to add, thank you.
All right, thank you. I'm going to go ahead and make that motion then to receive and file the disclosures as provided. Is there support?
Brett.
Support by Brett, thank you. I'm a yes. Brett?
Yes.
Paul? Paul's a yes. Kyle?
Yes.
All right, thank you. The date of the next meeting has been set for Friday, November 20th, 2020 at approximately 8:30 a.m. Immediately following the pension board meeting. That said, I'm going to go ahead and make a motion to adjourn. Is there support?
Brett.
Support by Brett, thank you. I'm a yes. Brett?
Yes.
Paul?
Yes.
And Kyle?
Yes.
All right, well, thank you, everyone. I appreciate it. Have a good month, and we'll see you soon.
Have a good weekend. Bye.
Thanks all. Have a good weekend.
Bye all.